JPMorgan's top internet analyst naming his top picks for 2024. Stores, subs, and search are all part of those picks. Let's bring in Doug Anmuth. He's head of JPMorgan's U.S. internet team. Amazon's number one. How much upside and why do they in particular come out on top here?
Yeah, absolutely. Look, Amazon's been our favorite name in the group for a long time now. Certainly in 2023. We saw very good improvement on the retail business, really in terms of execution, really kind of digging out of the challenges that they had during the COVID pandemic, and saw some real progress with regionalization of the fulfillment network in the U.S. and very significant margin expansion. So we think that's a big part of the story that continues in 2024. The other key component is AWS, which has clearly been a little bit challenging over the last several quarters, just with optimizations and corporates looking to find ways to save some costs. But we think that's kind of easing now, and we're going to start to see new workload deployment in a bigger way in 24. And that drives re-acceleration in the cloud next year, in our view. And the combination of all those things really means significant free cash flow generation. Starting to see that already, and comes up in a bigger way in 24.
And you think they're kind of broadly going to experience re-accelerating revenue growth, is that right?
So I certainly think they will in the cloud business. And we have a bit of acceleration in retail as well, more so in the early part of the year. But look, we think the consumer is holding up well, more broadly speaking, but e-commerce in particular. We would just point to really e-commerce and cloud as two of the areas where we think there is room for very strong secular growth for many years to come. And we think about e-com as just over 20% of total retail spending. In our view, over many years, that could go to 35 to 40%, and that can just grind higher. And cloud, the other big business for them, also certainly a sub 20%, percent of workloads that we think is actually online. So, two big areas that have a lot of headroom.
Hello, discerning investors. Today, we're taking a deep dive into the future prospects of a company that's been a game changer in numerous sectors, Amazon. This titan of industry has seen an impressive 83% increase in stock price year to date, pushing its market cap near the $1.6 trillion mark. Investment expert David Ryder sees Amazon as a diamond in the rough, an undervalued powerhouse with the potential to redefine growth. Welcome to Magnificent 7 Investing, where we help you make informed investment decisions. Amazon's growth story is far from finished, and here's why. The retail giant's success is fueled by a combination of factors that have set it on a path of continued growth and expansion. One of the primary drivers is the ever-increasing demand in its retail business. Consumers are flocking to Amazon for their shopping needs, contributing to a substantial rise in net sales. But it's not just the retail side of things that's propelling Amazon forward. There's another powerful force at work here: artificial intelligence, or AI. Amazon Web Services, also known as AWS, is experiencing a surge of growth thanks to the integration of AI. This cutting-edge technology is helping AWS maintain its position as a dominant player in the cloud service provider market, a sector that's becoming increasingly important in today's digital age. The third quarter of 2023 saw significant increases in Amazon's operating income and free cash flow, further evidence of the company's robust health and strong growth trajectory. This success is in large part due to the company's strategic focus on integrating AI into AWS. By harnessing the power of AI, Amazon is able to offer more advanced and efficient services, setting it apart from the competition. And let's not forget about AWS's contribution to Amazon's bottom line. With AWS accounting for around 62% of Amazon's operating income, it's clear that this segment is a significant part of Amazon's success. The combination of a thriving retail business and a leading cloud service provider powered by AI positions Amazon for continued growth and success in the years to come. With AWS contributing around 62% to Amazon's operating income, it's clear that this segment is a significant part of Amazon's success. Looking ahead, Amazon's growth trajectory seems set to continue. Investor David Ryder has some interesting projections for the online retail juggernaut. He anticipates a full-year 24 earnings per share, or EPS, of $3.73 for Amazon. With this in mind, he estimates a price target of $224 by the end of 2024. That's based on a forward price-to-earnings ratio of 60 times. Quite a leap, isn't it? But the story doesn't end there. Ryder foresees Amazon's earnings per share growth to continue, with an average growth rate of 25.5% from 2025 to 2028. That's a sustained growth over a period of 4 years, a testament to Amazon's potential in the long run. The key drivers here are the increasing demand in Amazon's retail business and the artificial intelligence tailwinds in Amazon Web Services. Amazon's dominance in the cloud services provider market is also expected to continue, thanks to their focus on integrating AI into AWS. But as with any investment, it's important to consider the potential risks. While Amazon's prospects look promising, there are some clouds on the horizon. Indeed, every silver lining has a potential cloud. For Amazon, these clouds could take the form of regulatory scrutiny and a potential economic slowdown. As a tech giant, Amazon is no stranger to the watchful eyes of regulators. Any changes in regulations or an increase in scrutiny could impact Amazon's operations and growth. On top of that, an economic slowdown could dampen consumer demand, affecting Amazon's revenues. Yet, it's essential to remember that risk is an inherent part of investment. David Ryder, a seasoned investor, has his eyes wide open to these potential risks, but remains upbeat about Amazon's prospects. According to Ryder, despite the risks, Amazon is currently trading at a discounted rate compared to its historical valuation. This suggests that the company's stock might be undervalued, making it an attractive investment opportunity. So the big question is, will these clouds cast a shadow over Amazon's growth, or will they simply pass by, allowing the tech giant to continue its upward trajectory? Only time will tell. But one thing is clear: Amazon's impressive growth and future prospects have caught Wall Street's attention. The company has already been included in Wall Street's top pick lists for 2024. Amazon, with its impressive growth and future prospects, has been included in Wall Street's top pick list for 2024. But what do you think? Do you see Amazon reaching $220 by the end of 2024? Share your thoughts in the comments below. Don't forget to like this video and subscribe to Magnificent 7 Investing for more insightful investment analysis. Remember, your wealth is in your hands.